After 4 days of selling, we finally got an upswing on Wall Street. We did have the S&P 500 up just over 1%. The Nasdaq was up nearly 2%, as we saw a little bit of a return to those work from home types of stocks, those cloud computing stocks, those high momentum stocks. We saw some nice push into the consumer discretionary names, along with a lot of social media stocks. On the downside, we did see the banks suffer yet again, and gold has been a little bit heavier than normal. So all in all, pretty solid day on Wall Street. We'll talk about how that affects our posture, if at all, and then we'll get into our trade application example, where I wanted to focus on a consumer staples stock that somewhat unwittingly became a coronavirus play so far in 2020. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 22nd, 2020. First of all, if you're new, welcome aboard. Remember to go to our YouTube channel, click subscribe. While you're over there, make sure you're signed up for our email distribution list as well. You can find that in the description area. In addition to that, we're heavy users of Twitter. We'd encourage you to follow us there. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then lastly, we do have a presence on Facebook as well. Feel free to join our group at the web address you see in the logo in front of you. All right, let's go ahead and jump into our charts here. And as you can see, I've got chart 6D pulled up here in front of us. And I like to use this as kind of our starting chart whenever we have a move of over 1%. And today just barely qualifies. The S&P 500 was up 1.05%. And so you can see kind of what that looks like in the middle of your screen off to the right-hand side here. We've got this green bar that makes its way on up to this blue horizontal area. A reminder that this black line in the middle is kind of your zero or your neutral performance. And then if the bars are green, that's a positive performance for the day. If the bars are red, it's a negative performance. And in today's case, you can see that the green bar was able to get up to that blue area, which, as the label suggests, is a 1% move there. So we've seen bigger days, without a doubt. But you know, as I mentioned in the intro, it is nice after 4 straight days of selling to get a fairly solid bounce back there. The VIX is sitting at 27 at this point. And we actually did have a pretty strong day in terms of market breadth. If we look at the advancers versus the decliners now on over here to the Market Watch tab on Thinkorswim, you can see I've got the S&P 500 pulled up here, and we had 332 stocks in the S&P 500 that were up and 169 that were down. And so more bulls than bears, it seems, out there, as long as you were hanging out in the right areas of the market. Let's go ahead and take a look at our more traditional chart setup now, and that will be chart 4B in this case. And this will give us a chance to look at the 4 main U.S. equity indices side by side, and that allows us to pick up on any discrepancies or try to get a sense of who the leader versus the laggard are. As it stands right now, despite the very strong rally that we saw today, even on the Nasdaq, which is up 1.71% today, you can see that all of our background colors of our charts are still that deeper shade of pink. In other words, we still have strongly bearish postures on our various indexes here. In fact, in the case of the S&P 500 and also the Nasdaq Composite, notice that the green intermediate line, which is what we use to develop our posture, is in the lower reversal zone, in other words, below 20. So with the S&P 500, that intermediate line is at 19.47, and on the Nasdaq Composite, it's at 18.69. And so, you know, once you're in that lower reversal zone there, it's a very good sign that you have some weakness within the market. But also keep in mind that it does open up the potential for eventual oversold cluster signals as well. And we haven't seen any of those in the last 3 months. If you look at this chart here, you can see that there are no green dots on the chart. You can see some red ones showing up. Those are overbought cluster signals. In fact, the high for the S&P 500 up there at 3588 actually did top off with an overbought cluster signal on that day. I know it's hard to see because that little red dot is kind of hiding behind the label there, but it's there. But we have not seen any green dots arrive. And remember, that can't happen until we get all of those different colored lines on the market forecast in the low reversal zone at the same time. And of course, with the intermediate line being less sensitive than the blue and the red lines, it's really the green line that we're oftentimes waiting for in order to have the possibility of a cluster. For example, you can see back over here, it looked like the red and the blue lines were kind of in the low reversal zone, or at least close to it on the same day already, but the green line was still very high at that point. So now that the green line's down there, if we do get some further selling in coming weeks, that blue and that red line are more likely to join it down there. And if that were to incur, the chances of some sort of a bounce would be heightened. Remember that the bullish clusters have tended to work out for those folks that want to take counter trend trades. They've worked out better than the overbought clusters throughout history, at least on the major market indices. Of course, every stock has the potential to produce its own cluster signals, which, remember, we put those at the bottom of our daily emails to all of you that are on our notification list. And I did check just before I went to air here. We didn't have any overbought cluster signals here today, but we did have a lot of oversold cluster signals, as you can imagine, a lot of oil companies and banks and things like that. So feel free to check that out in your email here tonight, as always. Anyway, the green line in the low reversal zone for the S&P 500 and NASDAQ Composite sets up that possibility that the overall indices could end up with an oversold cluster signal at some point in the coming weeks. For the Dow Jones and the Russell 2000, we're not quite there yet. We still have a strongly bearish posture because the green lines are trending lower and below the 50th percentile on the chart. So although they're not as bearish as the NASDAQ and the S&P 500, where their lines are in the low reversal zone already, both of these lines are trending in that direction. And so that's why, again, all those background colors are that deeper shade of red right now. You can also see that the moving averages are all red. So notice right there, and right there, right there, and right there. On all four of our charts, we have the red 30-day moving average, and what that signifies is price is below a falling moving average now. And you can see that transition that's taken place on those charts from a green moving average to a more cautionary yellow moving average, and now to a red moving average. So we'll see if that ends up acting as resistance at some point. If we can get another day or two of upside rallying in the markets, that's the next thing we're going to be on the lookout for, is how does it react once it gets up to that moving average. You can see the last time the NASDAQ went up to that moving average when it was yellow, it did use it at that time as a resistance point. In fact, it did it over here as well. So 2 different times it has used it as resistance already. And so that would have to be the assumption going forward as well until we see otherwise. So, if you've kind of been caught with too many bullish positions or something along those lines, and we get a bounce up to that moving average and it looks like we're going to fail there, that might be the time when you start lightening up on those bullish positions, or perhaps even putting on, new bearish trades to kind of offset some of your longer term holdings as well. So anyway, we didn't really have much in the way of change today, despite the impressive market rally out there. We continue to have those bearish postures. In fact, we don't talk about the market sentiment line all that much because that goes back and tracks a lot more data than these other three that are part of the market forecast technical indicator. But I should point out as well that the orange market sentiment line, those lines are all considered bearish at this moment as well. All of them have fallen out of the upper reversal zone. They're in the 70s and falling at this point. So they would be considered to have weekly bearish postures on that ultra long market sentiment time period that we're looking at there. Let's go ahead and take a look at another chart here. And in this case, we're going to take a look at the 3 green arrows chart. So as you can see here, it's actually the opposite of 3 green arrows. This is chart 4D for those of you that are following along at home that are premium members. Remember that the chart background color on this chart setup is going to be pink when we have 3 red arrows, and that kind of represents where we stand right now with things. The moving averages went red quite some time ago. And we are obviously dealing with some struggles even with MACD and stochastic at this point. So not a whole lot of positive news to share with you there. Again, it kind of supports the idea that right now we are making the assumption that today's move was just a quick little blip. And it's not to say that it can't last for another few days, but the assumption right now is that that move is now part of a kind of an intermediate downtrend as we head towards the election and other things here this fall that might make the markets a little bit more nervous. And so right now we just have to tread cautiously. And of course there are lots of different ways to try to make money in the market. You don't always have to be long stocks. You can be short stocks, or you could do bearish options trades, and we've done a few of those in these videos. As a matter of fact, I've got a few of those bearish trades still on right now. So that's hopefully what you're picking up when you're watching these videos that David and I produce every night. It's not just throwing darts against the board and hoping for the best. It's helping you understand that there's multiple ways to approach the market, and using the evidence that we see on the charts will help support whatever your next best decision is. And right now, unfortunately, we do have more bearish conditions, and of course that's going to change. Longer term markets do go up. It's just that they don't go up every single day, week, month, or quarter, and there will be bearish moments in between that you can try to make some money off of as well. All right, let's go ahead and take a look now at our 1040 crossover chart. Now remember, this chart is going to be kind of for the longer term view. These charts are 3 years in length here, and each one of these candles represents 1 week in time. So it is a less sensitive way to look at the markets because we are incorporating so much time in this case. So it's not going to get you out at the top, and it's not going to get you in at the bottom, but it does a pretty good job of keeping you on the right side of the trend. As you look at these 3-year charts here, with the exception of the Russell 2000, we've been mostly in an uptrend over the last 3 years, and these charts kind of signify that. There's only a couple of times in each of the charts there that we do see the bearish posture. Like for the NASDAQ, we saw it back here in kind of late 2018. That was during that really ugly Christmas time period, and then we saw it, of course, this year during the coronavirus. But otherwise, had you been long on all of these candles where you have a green background color over the last 3 years, you've done reasonably well for yourself during that time period, even if you haven't been perfect along the way. Now again, the Russell 2000 has kind of been the exception. There you can see the small caps have been a lot of chop and slop sideways. It really hasn't been trending in nature. You had a pretty good trend at the beginning of that 3-year period here, but ever since then you've been up and down, and you've been kind of chewed up there on that one. But anyway, as it stands at this exact moment in time, we do still have bullish crossovers that are holding, but there is a lot of wear and tear on the charts. You guys will see that we have some of these little red arrows showing up kind of above the price candles here in recent weeks on all 4 of our charts. And that's just signifying that price is starting to move below the 10-week moving average. Now remember, the background colors of these charts won't change to pink until the orange 10-period moving average crosses down and below the blue 40-period moving average. But along the way, in order for that to occur, of course, price is going to have to cross the 10-period moving average first. Remember, these are weekly charts, so it's a 10-week moving average and a 40-week moving average. And right now, where we stand with a lot of these charts is price is below a 10-week moving average, but we haven't seen enough selling pressure yet to actually get the moving averages themselves to cross over. So there is a little bit of a buffer there in terms of getting the moving averages to cross. So where we have the more sensitive charts that I looked at with you here just a moment ago, showing us more bearish intermediate conditions from a longer term perspective, where you have that buffer and you kind of have that grace period, you're still somewhat bullish when we have this particular view up in front of us. All right, real quick on the internet here. I appreciate those of you that clicked like for me the last time I did the video on Thursday. 128 of you did that. Thank you very much. I really appreciate that. Always try to make it a goal to get up and over 100 likes there on Twitter. So make sure we do that full video there for you here tonight, and continue to do that if you want those videos the same way in the future. The next time I do the video, in this case, would be on Thursday. Also, while we're over here, just a heads up that I taught my dividend growth investing class today. Taught a little bit early as I had a kid home from school sick. So I thank you for the flexibility for those of you that attended that class early this morning, but that has been recorded and it is posted to our Trading Rooms calendar right now. And we covered the utilities sector, which has been kind of beaten up here recently. And we actually looked at two utilities that we've never formally reviewed in a head-to-head matchup in all of my years of teaching dividend classes, and that stretches back over 5 years at this point. And so if you're interested in some newer stocks to kind of sink your teeth into, and you're a premium or plus member of Market Scholars, make sure you check out that recording from today. And then David also taught his directional option strategies class today. Tomorrow morning, I'm going to kick things off again with factor-based swing trading. In the past week, we've had a little bit of success and a little bit of failure there. We're 1 for 1, where we took one trade to max gain and another one to max loss. So we're going to try to load up the barrel again tomorrow in our gun and see if we can find a good target for our purposes there from swing trading perspective. And then David will be teaching his options inventory class there tomorrow as well. Also wanted to bring up, I just got done putting together some information for my factor-based swing trading class tomorrow, where we use our factor selector tool for that. And I wanted to highlight that momentum continues to be number one from a factor perspective, and that's as of tonight's closing price information. Back on over here to the Thinkorswim platform, wanted to go over to chart 3D, and this is our factor 6 grid here. And I wanted to point out what I had mentioned in the intro, which was today was one of those days where those momentum stocks were back. Remember, we had some stumbling blocks there in recent weeks with some of those momentum stocks. Now, they didn't give up the ghost completely, which is why they've remained number one on the factor selector, but there was a little bit more wear and tear, and you can even see on this chart up here in the upper right that the momentum factor has been trading underneath of its 30-day moving average for really the last 2 or 3 weeks. But today we had a really solid rebound. The momentum factor was up 1.24% today, which easily eclipsed all of the other factors on the board. The second place one, as an example, would be the quality factor, and it was only up 0.92% today. So today was one of those days where we saw a lot of those kind of momentum-oriented stocks back in action. And remember, that can be a good sign for risk appetite as well. We don't know where it's going to take us. Obviously, I just got done mentioning with the S&P 500, we still got work to do there. But at least we saw some encouraging signs that, some of our previous leaders aren't willing to completely roll over and play dead at this point. In fact, if you look at some of those bigger players, let's take a look at some of the social media names. Twitter had a really nice candle here today. As you can see, we were up 7% on Twitter today. You can see Twitter was already stabilizing on its upward trending moving average here. So kind of using that for the last maybe 2 or 3 weeks, and then today just boom, shot out of a cannon to the upside. We got a little bit of overhead resistance here from where we were trading back in early September, but that's a promising sign there. Also in the social media space, Pinterest. We don't talk about this one a whole lot. It's one of the newer names to the market as it's done its IPO more recently, but don't forget about it. Today was actually a very impressive move out of Pinterest. You can see here that it also was kind of riding its moving average in recent weeks, but unlike Twitter, it was also shot out of a cannon today, but it blasted to new highs. You know, with Twitter, we're still a little bit lower than where we were trading back in early September. With Pinterest, you can see we eclipsed this prior high back on September 2nd with today's move. Pinterest was up almost 10% today. It was 9.98%, and we closed nearly at the highs of the session. That is a new all-time high right there on Pinterest that we are printing here today. So that was a positive sign there as well. And then, you know, some of those traditional momentum stocks that are, you know, kind of known as the work from home variety have been impressing as well. Of course, we've talked about Zoom and its unbelievable 40% up day here after it reported its earnings back on September 1st. And then people haven't been talking about it quite as much, but like I was mentioning to somebody on Twitter last night, Zoom feels like it's Teflon right now. In other words, you can shoot your arrows and your darts at it, but it's just bouncing off. I mean, it is just, you know, dancing to its own beat right now. And you can see that Zoom video was up an additional 5% here today, and we are hitting all-time highs. So after, you know, this 40% up move and then this massive swing lower in those 4 candles immediately after that, it kind of looked like maybe this was a blow-off top type of a situation. You know, Zoom has come blasting right back, and we are now sitting at all-time highs there. And of course, you know, you've got a few of those other stocks like Teladoc. It did really well today. It was up 6% today. DocuSign was up 3.5%. So a lot of those more exciting kind of cloud computing types of names. There's your CrowdStrike also doing pretty well. You even had a lot of FinTwit, kind of like Square would come to mind there. Square had a nice day, up 3%. So a lot of those kind of leadership stocks that we saw throughout the summer that had taken the last 2 or 3 weeks off, they kind of seem to come back today. Now, whether that makes a trend or not, it remains to be seen. But at least we know that there's still a little bit of life left back in them. So let's keep our eye on that particular trend as well. All right, let's go ahead and take a look at some more charts. Let's go ahead and drift our attention now on over here to the 12 grids, and let's start with the asset class 12 grid, where I did want to talk about gold for certain. And as we pull this up, remember on these 12 grids, the background colors of the charts will tell us what the current intermediate posture is according to the market forecast technical indicator. And so let's start down below here with gold because that's been an interesting chart for much of 2020. And for the first part of this 3-month period, it looked like it was becoming a momentum chart to the upside. And you had some pretty nice gold mining stocks that were participating right along with gold itself. But boy, oh boy, yesterday was an ugly day, and today we did not get the follow through to the upside that you would have wanted to see, knowing that so many other momentum stocks did well today, like I just showed you with Zoom video and all of those. Remember, gold stocks kind of participated right along with those traditional momentum stocks this summer. So if there was an excuse for gold stocks to go up, today would have been it, and they decided to take a hard pass. And you can see here that the reason behind that is gold itself struggled today. It was down 0.5%, and it remains with a strongly bearish intermediate posture. And some of you guys heard me talk about a couple of weeks ago how this level right here where we were touching on September 8th was important because we had kind of like 3 different touch points right there. In fact, let me right click and maximize that so you guys can see this a little bit better. Right here on this candle, you can see there was a nice horizontal support level right there that touched that candle's wick, and then also these candles over here. And I was saying if we can manage to hold that level, we might be able to break out to the upside and be able to get a higher high here, because what I had been concerned about is that we had this series of lower highs, but we had kind of equal lows, and so I wasn't willing to kind of throw in the towel quite yet. And I was hoping that once we got up to this moving average, we can keep pushing above this prior high here on September 1st. but the market had other things in mind, and instead it used that moving average as resistance and pushed it down, with yesterday being a really ugly day, a gap down on gold. Today, continuation of that downward pressure as gold was down yet another 0.5%. So now you can see that our closing price here today is the closing, or is the lowest close that we've seen on GLD since going all the way back here to late July. So not a good trend in place there for gold, unfortunately. Some of the other charts may be looking a little bit better. In fact, part of the reason gold is probably weak right now is the dollar is strong. Notice this nice kind of bottoming pattern taking place here on the US dollar in the chart in the lower left-hand corner. Let me right-click and maximize that as well. You can see we had all these oversold cluster signals. It was getting hard to trust, kind of like the boy who cried wolf, where eventually just stopped paying attention to the oversold cluster signals. Well, eventually it worked. Finally here on this oversold cluster on August 31st, we finally got some gearing up on this one. And we've actually had a pretty solid recovery here. So not only are we back above the moving average, but as of the last 2 days, notice how the moving average color has changed to green. In other words, price is now above a rising moving average, and that has a tendency to start being able to create some support levels if we do pull back on UUP. So that's kind of the game plan right now, and of course that can change, and that's why we look at the charts every day. But right now we have to kind of go forward with the assumption that any sort of pullbacks in the dollar will be met with bounces higher, and any sort of moves higher in gold will be met with bounces lower. We'll keep our eye on that story. If that changes, of course, we'll keep you posted here. Now, in terms of the kind of the conversation of U.S. stocks versus foreign stocks, today was a little bit of a strange day where I noticed weakness in a lot of foreign stocks. And some of you might have heard the story yesterday with the banks, and it's not just banks in the United States, but global banks like HSBC getting caught up in some money laundering scandals. And so I wonder if that has a tendency to pressure some of the foreign markets. Remember, the banks are important in the United States, but they're not nearly as important as, let's say, the tech sector here in the US. Across the globe, that is the opposite. There are very few other countries out there where technology is more important than finance, and most of your major economies out there are going to be driven by either commodities or financials. And so I do wonder if maybe that scandal that was taking place has kind of pressured those foreign markets a little bit more so than what we're observing here in the United States. You can see that EEM was down 0.75% today, and EFA was down 0.03% today. Not huge days, but remember that is on the exact same time when the S&P 500 is up 1%. Remember that EFA and EEM are traded at the same time as SPY. So while there are some of those European countries that have closed up their own trading, a lot of times you will see the activity of the S&P 500 then kind of reflected in EFA and EEM's trading, kind of almost front running or leading into the European Open for the next day. So this was kind of an interesting day where we just didn't see that type of recovery. And in all three of those cases up there at the top, you can see we do have pink background colors, with SPY the darker shade of that, telling us that we have a strongly bearish posture, whereas the other two are just weakly bearish at this point, because they have not, up until the last day or two, they had not been breaking down as much. And remember, that goes back to that conversation as well. Because technology has struggled so much, the S&P 500 has done worse than the EFA and the EEM in recent weeks. But the last couple of days, those roles have reversed a little bit there. Let's go ahead and take a look now at our sectors. So this will be chart 5C for those of you following along at home. And unfortunately, I don't have a whole lot of great news to share with you here. As you can see, we have pink charts across the board, so the intermediate posture is bearish on all 11 of our sectors at this moment in time. The sectors that did the best today were your technology sector, which was up 1.58%, and then you also had communications up 1.93%. So those two were really big winners. We also saw discretionary up over 2%, 2.11% to be exact. Now remember, a lot of that is probably as a result of Amazon, because Amazon is a big, overweighting within XLY, and you can see here Amazon acted kind of like a lot of those coronavirus plays here today. They're back in action, so to speak, and Amazon was up 5.69% today. So Amazon makes up, like a third of XLY, and that probably reflects why discretionary did as well as it did. Although I must say that Nike did very well today as well. And in fact, it's going to continue. Nike was up 3% in the regular session. It is now up an additional $16 per share after hours because they just reported their earnings here this evening. So we had this nice pullback to that upward trending 30-day moving average on Nike. We bounced firmly off of it today, and we are likely going to be breaking through those prior highs from earlier in the month as soon as tomorrow morning when the stock market opens up again. Now, on the downside here today, we did have your energy sector lagging. Once again, it was down over 1% today. We did end with a oversold cluster signal, but let's be honest, we've had a lot of those recently, and they really haven't amounted to much. We also saw the financials struggle today. As I mentioned earlier, financials were down 0.84% today. So let's get into our trade application example now, and for that, I'm going to come on over here to chart 3A. And remember, I've already sent out the details of this particular trade to those of you that are premium members of Market Scholars on our Telegram app. So some of you might have seen this already, but let me explain the trade to the rest of you that are just watching the free YouTube video here. The stock in question is Kimberly-Clark. This is actually a dividend aristocrat company that's raised its dividends for more than 25 years in a row or more, and a very well-known entity within the consumer staples space. And one of the things that I mentioned in the intro is that this had kind of become a quasi-coronavirus play this year unwittingly, because Kimberly-Clark's main line of business is toilet paper, paper towels, that sort of thing, paper products, right? And of course, most of us remember back to, the spring and early summer when you couldn't find toilet paper at your local grocery store or Costco or what have you, because everything was sold out. So I'd have to believe that their earnings numbers are going to come in pretty strong here. But like any stock, it's not going to go straight to the sky. And when a lot of those coronavirus plays pulled back in recent weeks, Kimberly-Clark did as well. You can kind of see this this black downward diagonal trend line that I've placed on the chart here, where day after day after day, it made very little progress in trying to appease the bulls. Instead, the bears controlled the price action right there. And you can see that where that price action landed was right on this purple line here, where we kind of bottomed out the last 2 days. And notice that purple line, I've extended it all the way to the left here because I wanted to highlight for you that this used to be a resistance area back in July. And some of you have heard of that technical analysis concept that old resistance becomes new support. So of course, it took several weeks for us to get up and through that purple line initially. Once we did right there off of earnings, we went up quite a bit in a couple of weeks, and then we've rolled over and we've gathered support right back at that purple line again, where the idea is bounce up and away from that. And of course, we're breaking that downward diagonal trend line in doing so. And so this is going to be set up as a swing trade. This is also known as a hold pattern. In other words, close above the high of the low day, with yesterday being the low day. So you can see that I put my stop loss kind of below the lows of those candles yesterday, and then we're going to be shooting for a price target up here close to 150. I've got the exact details listed for those of you that are premium members in the Telegram, so make sure you check that out. Remember that I usually put those trades together during the market hours. Sometimes that's good, sometimes it's bad. I will say in this case that Kimberly-Clark actually sold off a bit at the end of the day, so it kind of left a little bit of a long upper shadow there, which is not always the best of looks for a stock, but it is what it is. At least still finish with that hold pattern that I mentioned before. Also, I wanted to point out that we have a bit of a a bullish near-term divergence that took place down below here as well. Take a look at this kind of troughing out of the blue line right here on September 11th. It was associated with this candle right here that I'm pointing at. And then we had a higher low on September 15th, which would have been associated with this candle. So we went from here down to here in price action, but the underlying indicator actually showed an improvement where we went from this low to a slightly higher low. Also notice that that second low was also associated by coincidence with an oversold cluster signal where you've got that little green dot showing up on the chart, letting us know that the blue, the green, and the red lines all closed in the lower reversal zone on the same day. This is actually the first oversold cluster signal that we see on this chart in the last 3 months, giving us an indication that, hey, maybe the selling got a little bit too extreme there and we might have a chance for a quick little snapback type of a rally. So I'm not sure if this is going to get back into its prior uptrend from an intermediate perspective, but it might very well give us, a couple of days or a couple of weeks of kind of a reversion to the mean type of a move, and that's all we really need in the case of this particular swing trade. So that's what I had for you here tonight. I hope you got benefit out of listening to my analysis. Remember, if you did, I would encourage you to go over and click like for me there on my Twitter post, which you can always find pinned to the top of my timeline, or you can click like directly from our website if you're watching the video within the Market Outlook area of our website. David should be back with you tomorrow, so make sure you're checking out his analysis as well, and then I'll be back with you Thursday afternoon. Until next time, I want to wish you all the best of success with your trades and investments. Goodbye for now.